Recently, I had a comment asking what would happen to Singapore's property market if economic crisis strikes. Honestly, I don't have a reply for you. What I can share is for us to look at what happened to Singapore's property market in the last 30 years when global crisis happened. So here's a quick sharing. Let's take a look at some of the global crises that happened in the past and how did Singapore's property market reacted. So there were a few major crises that happened throughout the last 30 years. In 1997, we had the Asian financial crisis. 2000, we had the dot-com bubble. 2001, September 11 attacks. 2002, SARS outbreak. 2008, we had the Lehman Brothers crisis. And in the most recent 2019, we had the COVID pandemic, which I think everybody is very familiar. So I can understand why some buyers are asking this question: what will happen to Singapore's property market when economic crisis strikes Singapore? Will the property price go down? And if it goes down, how much will it go down? So these are questions that we do not have an answer to. And to be very honest, it is very difficult to predict when a global crisis will happen. And when that happens, how low will it get? So for me, usually rather than try and forecast when will crisis happen, how much will price drop, I would advise my client to look at it in another perspective. That is when a global crisis really happened. How long did it take for Singapore's property market to rebound back to the previous high? Why so? Because that determines how fast we can get our money back. And that is, I think, equally important for you to know. So let's take a look at some of the examples. In 1997 Asian financial crisis, it took about 5 quarters for us to rebound back to the previous high. In 2002 SARS outbreak, it took us a bit longer, about 4 years to rebound to previous high. So in my opinion, why I think it took quite some time is because we had a quick succession of global crises that happened between 2000 and 2002. It is almost every year we had a major crisis. In 2000, we had the dot-com bubble. 2001, we had the September 11 attacks. Back then, the financial went into deeper crisis. And right after that, we had the 2002 SARS outbreak. So when so many, unfortunate things happen at the same time, it usually takes the economy a bit longer to recover, lah, right? Next, let's take a look at 2008 Lehman Brothers when, the whole financial market went into turmoil. But take a look, how long did it take for Singapore's property market to rebound from the low? It took us only about 3 quarters to rebound to the previous high. So let's take a look at the most recent 2019 COVID-19 pandemic. It took us about 5 quarters to rebound to previous high. So what can we learn from this? It shows that after every crisis, the rebound of Singapore's property market is usually sharp and swift. That means today, if you can hold on to your property for at least 1 or 2 years, the likelihood for you to lose your money is low, right? So don't speculate property. Have the ability and the means to hold on to your property for a longer period of time. That is most important. Because if you can, you will not be forced to panic sell and confirm you can get through it and come out stronger. All right. So if we look at the long-term price trend of Singapore's property market, the next high is always higher than the previous high. So what does this mean? This means today, if you have the ability to hold on to your property over the long term, likely the value of your property will not fall below what you bought for. So the most important thing for us to understand here is that we can always try to time the market, but most often not, we are always paying a higher price there. Why do I say that? So let's take a look at one example. So let's take a look at this particular unit in this condo. In 2006, this first owner bought it at 991,000. 5 years later, 2011, someone bought it from him at 1.72 mil. 2018, someone bought it 1.765 million. In 2023, someone bought it at 2.215 million. And take note, this is the same unit that we are looking at. So do you want to pay more for the same unit, older but at a higher price? Next, same. Let's take a look at another unit. In 2007, someone paid for this at 1.12 mil. 2012, a person paid 1.83 for the same unit. 2022, someone paid 2.3 million. So if you take a look at this example, which happens to most of the resale condo, if you have noticed, is that resale price is always getting higher and higher, right? Does it really make sense for you to pay more for the same unit in the same location with the same attributes, but it's older today at a higher price? That is what we don't want, So the key takeaway, buy early, buy within your means, and have the ability to hold on to it over the long term. I'm Jason. Let me know if you need help. See ya.